Is a China story also an earnings potential story there?
I think very much so. You know, what has happened in China is that it's gone through a 4-year down cycle in earnings. So if you look at forward EPS for MSCI China, that peaked back in July 2018. It went sideways for a bit and then downwards for multiple years. And then it bottomed in October of last year. It's been picking up since then. It's not a very great or very sharp acceleration. But what we're seeing is that investors are starting to having to change their mindset from what was a very easy sell on any rally market to potentially entertaining the idea that they need to be buying on dips as earnings continue to recover. If you think back to October last year, November last year, the whole narrative about China was that the reopening is never going to happen. Then it did. Then it was, okay, international reopening is not going to happen. Then it did. Then it was like, okay, international reopenings happen, but consumption will never recover because consumer sentiment is very poor and savings are depleted. We saw very strong consumption numbers for Q1. Now investors are just running out of reasons to kind of avoid holding Chinese equities here. And like you say, very much so, it's the earnings recovery this year that is going to drive most of the upside from here.
The domestic nature of the reopening in China, though, seems to be disappointing investors, especially who expected countries that are dependent on this reopening or on the Chinese economy, like Korea and Taiwan, to actually get more support here. So why are you seeing the earnings potential in those two economies when, for example, the semiconductor pressure continues?
Yeah, so Korea and Taiwan is more of a tech story, and like you say, the Chinese recovery in tech demand has been slightly slower than we expected. I think it's still on track to happen. It's just happening at a slightly slower pace. The point being is that if you look at earnings in Korea and Taiwan, they are right now at cyclical bottom, cyclical trough levels. So we are in this trough formation process. It might take a little bit longer than we previously anticipated, but it's very difficult to anticipate further downside from earnings at current levels. And we are starting to see price repair across various product categories, and if that continues to happen, we would expect like a significant rebound in earnings estimates in Korea and Taiwan. So if you particularly look at 2024 over 23, the recovery is quite visible. If you focus on the quarters in 2023, it can get a bit mixed, yes.
Mixo, you said that investors are running out of reasons not to invest in China. Is geopolitics and that risk a good reason? Because you take a look at the reaction to even just a threat of more curbs from the US when it comes to the chip sector, right? We had the biggest one-day drop in just about 6 months for the CSI 300 on Friday. We've seen the Golden Dragon the Nasdaq Golden Dragon China Index wiping out its gains for the year. So does this tell you that these, domestically facing stocks are still vulnerable to this kind of news flow, and are you better off getting that exposure to the China rebound story externally?
This is indeed what investors have been doing, right? Like buying European stocks and luxury stocks on the back of a recovery in China, even buying material stocks on the back of a recovery in China. And that makes sense. If you look at the geopolitics, like you mentioned rightly, it's been a very large driver of, the multiples in Chinese equities. And that continues to be the case. There's no taking away from that. But my point being that, given where the starting point is in terms of geopolitical issues between US and China, it doesn't look very likely that we will get a significant deterioration this year. If anything, there is, renewed talk of senior officials from the U.S. administration visiting China in the coming months. And if those things materialize and nothing really significant happens in terms of China-U.S. frictions, you can see those risks being priced out on the margin. But like I said, this is a cyclical pricing up and down. But on the whole, Chinese multiples don't need to do a lot of hard work because the earnings recovery is coming through. And that is what I think is the real story in China this year.